Progress.
Good morning. Welcome to America First Wealth Management Investment Outlook for December 2nd, 2024. My name is Dan Liu. I'm the Chief Investment Officer and Portfolio Manager at America First Wealth Management. This is our standard disclaimer. We're just offering our opinions here. We're not offering to purchase or sell any securities or sell any investment products. And these views are as of our investment team through the period ending December 2nd and are subject to change based on market data and other conditions. For any financial advisors who would like to sign up and be notified of any updates or investment outlooks that we publish, please go to AmericaFirst.fund, F-U-N-D, and register under our financial advisor section, and you'll be promptly notified of all updates in the future. What we like to do is talk about our outlooks first and provide supporting data. And basically, we are suggesting that the Trump election victory rally does continue. There are some recent concerns about tariffs. Certainly, Trump has made huge overtures regarding tariffs, which we'll talk about shortly, or these negotiating leverage points that Trump is trying to put out there. So it remains to be seen. We'll be watching these closely. On the cabinet front, Trump nominated Kash Patel to lead the FBI. There's a lot of angst and concern about that because Patel is known to be a government conspiracy theorist, but certainly he's been very supportive as a Trump loyalist in the past, and Trump is seeking to reward him in that position. That may not have any direct implications on the economy, but it will certainly send a lot of headlines out there. We'll be watching that closely. Also, over the weekend, a surprise move by Joe Biden to pardon his son, Hunter, for basically the last almost 10 years of potential crimes that he may have been committing or being accused of. So that's kind of a surprise because Biden had indicated at least 2 times before he would not pardon Hunter, and he certainly did that. So that was a bit of a surprise. Shouldn't have any impact on the economy or stocks, but it's just a headline piece I wanted to point out there. Last week, we saw strong consumer spending data and a drop in a 10-year bond yield. And to us, those seem supportive of a strong finish to 2024. And this being the first trading day of December, that data last week was certainly supportive of a strong finish to the year. Our initial thoughts on 2025, well, we clearly have a new president, Trump, in place that we know from the past he loves to watch the S&P 500 closely as a real-time report card. So it's kind of refreshing to have a president that pays attention to the markets, which we as investors do like to see. And certainly, first 100 days will be a whirlwind, and certainly his pre-inauguration activities, all the meetings he's having, the cabinet picks, certainly we expect it to be a whirlwind of activity. We'll be paying close attention to that. In terms of key macro data points this week, we got this morning, 11 a.m., ISM manufacturing PMI. Tomorrow we have the JOLTS job openings, Wednesday, ISM services PMI, and a speech by Chairman Powell at 2:45 p.m. And on Friday, which we think will probably be the most important data points, the non-farm payrolls and unemployment rate at 9:30 a.m. And 11 a.m. will be the Michigan Consumer Sentiment preliminary data. So certainly some of the headlines we saw this week. On Monday night, Trump vowed to introduce 25% tariffs on goods coming from Mexico and Canada, and an additional 10% tariff on goods coming from China. And we wanted to initiate these additional tariffs to clamp down on drugs and illegal immigration. That prompted a call with the president of Mexico, Claudia Sheinbaum, and the headlines were kind of mixed there. Trump said that she had agreed to stop migration through Mexico, and Sheinbaum responded and said that no, that's not what she said. She reiterated their position, which was not to close borders, but to build bridges between governments and people. So a little bit of he said, she said, and lack of clarity on that. Turning to Canada, initially Trump said he would not talk to Justin Trudeau, but then Justin Trudeau flew down, had a nice dinner with Trump. Not many details emerged, but obviously you can see everyone was there smiling and had a nice event down at Mar-a-Lago. So hopefully relationships with Canada will continue to be strong, and any concerns about tariffs hopefully will be alleviated. And also early this morning, Trump threatened 100% tariff on the BRICS countries if they try to replace the dollar, which as currency and gold watchers have noted, the BRICS countries have made increasing overtures and movements to try to replace the dollar for trading and currency use. So that's something that is new, and we'll see if that has an impact on the dollar, which we're watching closely. This is the DXY dollar index, which, as you can see, has been strengthening since the election. A little volatility here near term, but we'll be watching the dollar index closely as the continued discussions on tariffs and trade agreements will no doubt create volatility on the dollar, and that will have an impact on assets, investments in stocks that go up and down based on the strength or weakness of the dollar. Turning to the weekly market stats ending last week, fairly strong week across the board except for small caps, which were down. Certainly the 1 month return for small caps was the highest among the group. But overall a pretty strong November across the board, with the exception of international stocks that were down about 1.6% for the month. Turning to the Magnificent Seven names, which we've been tracking pretty much all year. Bit of a mixed bag for the week. 4 names up, 3 names down. Strongest name in the group being Tesla, which market pundits indicated that if Trump does implement higher tariffs, and also if the $7,500 federal tax credit on electric vehicle purchases goes away, Tesla would win on both accounts with higher tariffs, and being the lower cost producer of EVs, they would benefit versus other domestically produced EVs if the $7,500 federal tax credit for EVs goes away. So that was a big boost for Tesla, and you can see year to date, Tesla has in the past been the biggest underperformer, has now moved up in terms of rankings year to date versus the other Magnificent Seven names. Turning to the sector performance for the week, a very strong week led by healthcare stocks as they rebounded after the concern about the appointment of RFK Jr. To Trump's cabinet to oversee healthcare. So nice to see a rally there. Real estate was strong with the decline in interest rates. Consumer was also very strong with the strong spending. And we have the Black Friday, I guess it's now the Black Friday month of sales in November. and Black Friday on Friday, and today is Cyber Monday. We do continue to see strong spending by the consumer, so consumer discretionary stocks continue to benefit. You can see clearly strong sector performance across the board, except for energy, which is down 1.79%. But there are signs of a rebound in oil prices this morning as the Chinese economy is showing signs of a rebound. Looking again at the S&P 500 post-election, see strong results for the S&P, continuing to go up. And as for the one-year chart, very strong performance by the S&P 500, continue to hit new highs. We're above the 10-day moving average. And the RSI is heading towards overbought territory, but could bump around there through year end before there's any signs of material weakness. 10-year Treasury yield, as I mentioned, had declined for the week, down 23 basis points, which is a sharp rally in 10-year bonds. We closed the week at 4.18%, hopefully looking to head back to the 4% or below level. We'll see if the macro data is supportive of that. There is a FOMC meeting this month, and expectations are for another rate cut, but there's a lot of concern about whether or not it'll happen again, given the strength of the economy. But we'll see, and also continued inflation seems to be sticky, so we'll see if the Fed will continue on a third rate cut or not in December. That will obviously be a market direction confirmer or changer, so we'll watch for that carefully. For the year, 10-year interest rates are now up 30 basis points. That margin has narrowed as rates have dropped last week. Turning to yield curve, the last week's yield curve is in blue. You can see it's dropped versus a week ago, which is the top line. So nice to see yields dropping across the board. And that prompted a strong rally in bonds, especially for longer duration bonds, and also helped support the stock market rally last week and for last month. Turning to the economic calendar, as I mentioned the highlights here, but I'll just kind of flip through this. Won't dwell on it. Turning to S&P 500 earnings, just a handful this week, but some important ones. Salesforce, CRM, ticker CRM, reports after the close on Tuesday, looking for consensus 244 per share in earnings versus a year ago 211. Consensus revenues looking for 9.3 billion. That should be an important, almost a bellwether software company for S&P 500 companies. As many know, Salesforce is an important software for sales professionals. Usually it's a good sign if Salesforce has good results and good demand, because that means that companies are more bullish and anticipate higher sales activity, and they will purchase additional licensing seats for Salesforce software. Turning to Wednesday before the open, we've got a couple of consumer staple companies, Campbell Soup and Hormel, reporting. Dollar Tree, which is a consumer discretionary stock, will be important to watch because Dollar Tree serves a lower revenue population, lower income population. So we'll see if the lower income population consumer spending has been as strong and robust as the higher income population. So that's one that we'll be following closely as well. After close, this reporting will be Synopsys on Wednesday. And on Thursday, Dollar General, like Dollar Tree, will be another indicator of the lower income consumer. And after close, we've got Cooper Hewlett-Packard, Lululemon, and Ulta Beauty. And Kroger is also reporting. We don't know if it's going to be before or after the close on Thursday. So that's pretty much wraps up for the week. We do remain cautiously optimistic as we finish the year. It'll be a good year for most, and it may be tough for many active managers to outperform the S&P this year, as it's been a very strong year for the S&P. But we are seeing signs that the breadth is expanding beyond the Magnificent Seven names. So that's a bullish indicator for us, and hopefully it will lead to a strong start of the new year as well. But for now, we remain bullish as long as all the macro data and lack of any black swans emerging, especially with the uncertainty of what's happening overseas in the Middle East and regarding the Ukraine-Russia war, which we'll all be monitoring closely. And in addition, all the activity by the Trump administration as they round up their cabinet appointees and try to get those approved quickly and start off the year with hopefully a strong start. And with that, if any of our listeners or current clients or prospective clients are interested in talking with us directly or learning more about our products, or to sign up at our website, which is listed here, please contact us, myself or Jim Monahan directly. Our emails are noted here. And thank you for tuning in this week. And we'll catch you again next week, and have a great week. Take care.